Hello, this is a blog update for the 14th of November 2012. The reason I've not done any updates in October is I didn't really trade in October. I decided to have a month off. I was doing some other stuff, and it's nice to have some time off. I've been trading solidly since February, so when you pull yourself away from the market, you can reflect quite well and think about things you need to do to improve your trading and how you want to go forward. And you don't need to trade all the time. It is a long-term thing, so it's about keeping the relevant perspective. Today we're going to talk about four things which are very important to becoming consistently profitable. That's patience, discipline, risk management and profit taking. The last one's quite interesting for most people, but patience and discipline tend to be quite low on the priority for people to learn and the skills for people to gather, but they're absolutely essential along with risk management in order to achieve what we want to, which is consistent profitability. I'm going to talk about two trades, and I'm also going to show you the second trade because I tend to record all my trades unless they go on for hours and hours and hours, and I just have snapshots of them that demonstrate the patience, discipline, risk management and profit taking strategies that I've learnt here and how they apply in the real world of trading. We'll have a look at the spreadsheet I used to record my trades. The two trades were interested in this one on the 12th and this one on the 13th. And hopefully they'll demonstrate the attributes I've just described. You may notice I'm trading with a slightly smaller account this month. That's because I've had to spend money on some not particularly interesting things to do with a new house I've just bought. And one of the golden rules of trading is you only ever trade with money you can afford to lose. But at the moment it's not particularly about the money, it's about continuing to be consistently profitable and trying to make my points every month, and then the money will take care of itself. So it sounds a little bit bizarre that I'm not really that bothered about the money at the moment, but I'm more interested in developing the psychology and mindset to be a consistent trader. The money will take care of itself as far as I'm concerned. It's a long-term process. It's not get rich quick as we tend to repeat ourselves quite a lot telling people. We'll have a look at the charts now. We're on an hourly chart here, and this is the 7th, which was the election day when we came down and stopped at this 87 level. We're seeing the Friday, the high of the days, were also at that 87 level, so it was becoming quite a key level. It looked like we were starting to get some more momentum to the upside, and we'd closed above, not on an hourly chart, on smaller time frame, above this 87 level. And for various reasons beyond the scope of this video, I thought we were going to retrace back to the 50 and 61.8 sort of Fibonacci levels, or at least make an attempt of doing so. And we'd also, a couple of candles had closed above the 38.2. As we can see, that wasn't the case, and it came back down. I ended up getting stopped out, and my stop was at 5740. So the point here with this trade is that I was pretty much in red from the start, and it drifted down and took my stop out overnight. It was about a 20-hour trade, I think, which is a very long for the time frames I usually trade. So that can be quite testing of patience and discipline, because if you see yourself in a negative trade for that long and eventually you do get stopped out, it can be frustrating. And what you can do is come back the next day and really want to get your money back and take revenge on the market and things like that, and that's where your patience and discipline comes in, because if you do that, then you're guaranteed to get quite badly burnt. So I've got up on the Tuesday, and the FTSE action's not been particularly good. There was possibly a double bottom here that you could have taken nearly 10 points from, so that was probably the only trade of the morning. The rest of it's just chopping around until the US has come in. Look at the contrast between the price action and candles, where this has just been probably low volume drift and it's chopping around, and then we get some conviction and some volume into the market and these nice momentum candles. So I've had to be patient and disciplined and wait for the right setup, and for the reasons of the strategy I've used, I've gotten at 43 and got out at 83, which is quite a big move. I don't tend to capture moves that much. I tend to go in at a larger size and look for smaller moves. And that was a logical exit position because, of course, again, this 87, once you saw the strength of this rally, that seemed a logical point that it was going to end. And the final part of this video is to talk about scaling out, which will have a look at the live trade to talk about and discuss some of the benefits of scaling out. So here's the trade I'm in from 43, and we're starting to see a pretty decent amount of P&L, particularly relative to my account. So what we have to decide now is how we're going to take profit. Are we going to take it all, or are we going to take some off the table? And the reasoning where I decide to scale out is this is a pretty strong uptrend, and there's not particularly any resistance levels below that 87 level that I think are going to get hit. So again, it's thinking in probabilities. Would you want to go short looking at the price action from 1430? The answer is no, and the reason is because you don't know where the top's going to be. So reverse that perspective back around. What's the probability of me picking the top of this trend? It's quite low. So, just because I'm in a winning position doesn't mean I'm going to snatch profit. It means I'm going to carry on and let the trade play out until the market shows me that the trend's ended. So at this point I decide that I want to take 50% of the money and pay myself. My stop's also in positive territory as well. My stop's +1 at 44, so this is a risk-free trade, subject to getting some enormous gap down that we don't tend to get in hours with the FTSE. And there I've taken 50% off the table. And the reason we do this is so if there is a larger trend, which there was another 20 or so points available, we can make the most of it. But at the same time, if the trade turns back against us, we don't lose all our profit, as I'm sure you may have experienced. There's nothing more frustrating than having a good winning trade turn into a loser because you've not made money available to you. What people often do, though, is when they scale out, is they get frustrated because they didn't take the maximum amount of money they could have had. I mean, if I'd held the full position, I could have nearly had double the amount. But you can't think like that. You've got to remember that you're reducing risk, and it's what you're doing at the time that matters, not what happens in the future. Because it's easy to see retrospectively what happens, but that's not what's important. It's how you act at the time, and how you act over a series of trades that are the route to consistent profitability. So hopefully that gives you a demonstration of the parts of trading that people don't often talk about, the patience and discipline after a losing trade that took quite some time to finally get stopped out, and having the patience and discipline not to get revenge at the market or want to make up for it really quickly and have to sit around and wait for the right trade to come. And also the examples of risk management in terms of actually making sure I let my stop get hit. If you let your losers be small and cut your losses early and then run your winners, that's how we make money in this game. And also the example of profit taking and scaling out. And of course, if we can help anyway, you can email me at simon@FTSEday.co.uk. We're also on Twitter @FTSEday. I'm on Twitter at SimonFTSEday, and another moderator in the room who's very, very good, Michael C. for FTSEday as well. Should you need anything, don't hesitate to contact us, and we'll see if we can help you become consistently profitable. Thank you.